All right, oil prices are higher this morning ahead of OPEC's monthly oil market report later today, followed by the International Energy Agency's report on Wednesday. Investors are expecting the data to forecast tight supply in the market as Saudi Arabia and Russia make voluntary cuts and extreme weather threatens production. Still, our next guest remaining overweight in this sector, seeing some investment opportunity at this time. We want to bring in Lori Calvasina, RBC Capital Markets Head of U.S. Equity Strategy. Lori, it's good to see you. So we certainly have seen a run up in the price of crude. And with that, we've seen a bump here within the energy sector. What's the bull case? What's the catalyst between now and the end of the year?
So I don't try to call the oil price first off. I have great commodity strategists who do that. And I will say that they've been saying, look, the physical market is some of the healthiest, dynamics that they've seen in a long time. They feel like maybe there's risk of some consolidation in the short term. And we've said, hey, like they do fantastic work. That's clearly a risk to our view if we get a little bit of short-term consolidation in the oil price. Let's put that aside for a minute. I'm an equity person, right? My job is to call the stocks, not the commodity. And when I started to hear some rumblings, from kind of the trading community about a week or so ago, like, okay, maybe this has gone too far too fast. I said, well, what are my models showing? We're in the very early stages of an earnings revision recovery in the energy space. And think about it this way. Last year, tech had really deeply negative revisions and then strong revisions to start the year. At the same time, energy, financials, value sectors had negative revisions. So we had this really weird market. And now we're actually starting to see energy do what tech was doing at the beginning of the year, exiting that downward revision cycle, but it's still very early days. So that's point number one in favor of the sector for me. Secondly, what we're seeing on our valuation work, and I'm a big believer that valuations may not work in the short term, but they tend to be borne out over the longer term. And what we're seeing there is you've still got deeply compelling valuations if you look at the sector, a median PE against the broader market. We do that work in both small cap and large cap. We do medians to make sure we're not getting, sort of tricked by a big company or two in the index. And you're still got very, very compelling valuations. I layer into that the conversation you all just had, on the tech earnings. And I think that the tech trade is still highly overvalued at this point in time, or the growth trade generally highly overvalued, crowded. I agree that longer term, that's where you want to be from a fundamental perspective, but we've just got to go through a correction there. And at best, you're maybe a third of the way done. Money is going to rotate into these value-oriented sectors, and I think energy is giving you one of the best alternatives in that part of the market.
So is it better to be weighted in small caps or large caps in that instance? In your notes, you talk about small caps jumping out in your latest updates as well.
Yeah, I would say on the energy sector specifically, I think they both look great. There's not really any differentiation on my work. Same thing if I look at like equipment and services versus oil and gas names. They both look pretty good, maybe oil and gas a little bit better. But I think small caps generally, if I'm thinking about it from a Russell 2000 versus S&P's perspective, shares a lot of the same attributes that the energy sector does. We've been seeing positive revisions in S&P companies for the last, kind of 6 weeks. Well, we've only really started to see that come back in the small cap space in September. So earnings revisions, earlier in their recovery, valuations are deeply compelling. I think that small caps have a little bit of a tricky issue in the very short term that energy doesn't have, which is we're all saying, okay, is this recession we've been waiting for finally? Is it really going to happen? Are we going to get it? Small caps are cyclical. That's a challenge. But I have been telling people, if you look ahead to 2024, I think we're going to start having conversations about the year ahead outlook soon. People are going to start to talk about rate cuts next year. Maybe they're not till the back half. That is typically a very strong catalyst for the small cap stock. So I think you may have to be more patient in small caps than energy, but I think you'll get there and you want to be accumulating now.
Lori, how much does the recession story really matter at this point? Because we've been talking about it now for over a year and a half, 2 years. If we do get a shallow recession, how much risk is that really here to investors?
I honestly think it causes short-term bumpiness. I mean, we have, done a tremendous amount of work in this equity market already. And again, I think the leadership areas are tired and need to take a break. That has market wide ramifications. But on the topic of recession itself, I think number one, we priced it in last October in the S&P. I think we priced it in last summer in small cap. Point number two I would make is if you look at, whether or not we had a recession, it's somewhat immaterial to me because if you look at the consumer sentiment survey on the Michigan data, consumers felt as bad as they typically do in a recession last summer. That's because of the inflation environment. And small caps and large caps have both been trading in tandem with that recovery in consumer sentiment. So as long as inflation continues to moderate and the labor market behaves, I think that consumer recovery, can endure, and that's good for the stock market. And then point number 3 I would make to you is, I don't think we really even needed to price the recession to begin with, because if you look back at 1945, when we transitioned from a wartime economy to a peacetime economy, the stock market completely ignored the recession that time around. And I think COVID, I think is a decent analogy to a wartime economy, and everybody sort of understands you got to take some hits to get back to normal.